Big Five is a retailer that sells sporting goods in the Western states and is growing eastward. They've been a discount retailer for some time. I've known of them for more than 30 years, and I've been investing in this company for over 5 years. I'd like to tell you about them. My name is Victor. I'm a value investor. I have an MBA and have a lot of business experience that I like to use when I look at companies that I look to invest in. Do me a big favor and like this video. Consider subscribing to my channel. If you like videos like these, it'd really help my channel out. Let me tell you about Big Five. I scorecard all my investments to make sure I'm following a process so I could continue to improve over time. That process involves 4 questions followed by a decision to buy, hold, or sell. First question, do I want to be a part owner in this business? Do I like this industry? Do I believe the management team is operating the company well? Do I think debt is under control? And I want to discount the stock. That way I could see my stock investment rise in value. Based on those questions, I buy, hold, or sell. Big Five has been providing discount apparel, discount sporting equipment, and they've been doing a really good job. I have been a customer for over 30 years, and principally because shoes is an example. You can find a very good value of Big Five. Camping equipment, they have very good accessories and really good prices. And if you have a son or daughter in sports, they have equipment for softball, baseball, you name it. So a lot of families end up there to buy goods for their kids. Now, it's retail, which is always a risky proposition because retail is just so darn, tricky. But I happen to know this company well, and I've tried to invest in this company at a very good discount going into the stock. And so I've been very careful. From an industry perspective, it's not one of my favorite industries. I'm very careful with retail because there aren't big barriers of entry, meaning what if another retailer came in and offered the same stuff for a better price? And then there's always the Amazon risk where, well, Amazon can sell you all this stuff. So there are those risks. I really like the company. I think they do really well. I think they know their customer really well, but the industry is not my favorite. Big Five announced their earnings just yesterday, and I refreshed my data. Overall, I think it's a good news situation. During COVID, everybody wanted to get out and go camping and just get outside. And Big Five literally sold out of all their inventory. They had record years. They generated tremendous free cash. At one point, they generated 25% of free cash flow in 1 year of their market cap, which was pretty incredible. But this year, it's a down year because now that we're past COVID, they have to continue to operate. And they operate really well. Their revenue did go down, but it's still higher than 2 years ago. So that's good to see. They pretty much broke even, which also good to see, but they're generating free cash flow. What's working in this stock is the dividend. They pay a very high dividend that they can't afford. So that's really good. They pay a 25% per quarter dividend, which ends up being $1. And the stock is basically trading less than $10 per share. So it ends up being a 10.45% dividend, and they can afford it. So that's pretty incredible. So you can hold this stock and pretty much be paid 10%, which is a really strong proposition. Their third quarter guidance is that they are going to be 20 to 20 cents per share in profit. And that's really good. They're going to be profitable this year. They're going to generate that free cash to pay that dividend. And so anybody that camps out in this stock will make 10%. And if the stock goes up in value, that's even a bigger bonus. The balance sheet, the company doesn't have any debt. That's great. COVID really helped them because during the COVID years, they basically sold out of all their inventory and they paid off all their debt. So that's great to see. They're generating free cash flows this year, which is very good. And one thing I wanted to take a look at was they generated cash flow from operations, and this is Q1. They haven't released Q2 yet. And they generated cash flows from operations of $12 million. They only spent $2.5 million in CapEx, and their payout on dividends is $6 million. So you can see that they have more cash than they need to pay that dividend. So that's good to see that 10% dividend is in a safe place. I believe Big Five the stock price is currently discounted at 30%. How did I get to that number? I'm going to use 2 methods to value the Big Five stock price. The first method is discount free cash flows that I expect from the company in the future. And the second is taking a look at that dividend and being able to value the company based on that really attractive dividend. Let's get into cash flows first. I'm taking Q1 earnings and I'm just going to multiply it times 3.5, not 4, which would be the whole annualized year. I want to be a little conservative and just go 3.5. And that gives me a run rate of 35 million that I expect that they're going to do in free cash flow in 2023. I'm not going to have any growth for the next 4 years and really no growth at all. And all the future cash flows that I expect from this retailer beyond year 4 are 318 million. All the cash flows combined, I'm going to discount and say, what are those cash flows worth to me? If I discount them at a very high discount rate of 11%, since they are a smaller company, retail tends to be risky, and I get a present value of all those free cash flows of $297 million. I'll add the cash on the balance sheet. They don't have any debt. So the equity value is 303 million. Since it is higher than their market cap, and it provides a 47% discount if you compare the intrinsic value per share versus the current share price. So a nice attractive discount using the free cash flow method. When we look at the dividend value, they pay a $1 dividend per year. And if I discount that, and the formula is right here that you can use on your own. I'm using zero growth rate, by the way. I get a pretty much, it's being sold at a premium of 3%. So in my opinion, that's fair value, meaning the price of stock, or the price of the stock is priced right at that dividend value. So that's good to see. I'm going to combine the two and get to a 30% discount on the stock because I take 2 parts free cash flow method, 1 part dividend value method, and I get to that 30%. By doing my homework on the stock, I see where I think the price ought to be based on free cash flows and the dividend value. And I think it ought to be at $12.20. If the market's trading the stock at $9.36. So there is an opportunity there to see the stock price go up in value. And that's the advantage, a couple of advantages with Big Five. One, they're a small company, so no big analysts are covering them. I know the company, they're nearby, my home. I've known of them for more than 30 years. I know that they have crowded stores and they do really well. So it really provides a lot of advantages to the small investor. As you could see a couple of years ago, they had a short squeeze, which was really interesting. I was a stockholder at the time. It was awesome because the stock price pretty much tripled just in a matter of like 2 months. I was able to get out of the position, make a very good gain. And then I came back to the position once it settled down. So with information, you can really take advantage of certain situations in a stock like Big Five. So year to date, they're up 4%, but really that big dividend is why I'm participating in this stock. So let's revisit the scorecard. I like the company. I know the company really well, so I'm comfortable investing. It's not my favorite industry. I'm still going to give it a check mark. And it's one of those, I'll get into Big Five because I know the company, but I'm not buying a bunch of retail companies. The company operated exceptionally well. These guys know discount retailing. They have their category very well defined, which is, outdoor, sporting, sporting shoes and so forth. They do that very well. Debt, zero. And there's a nice little discount available on the stock. So I'm going to continue to buy Big Five stock, get that big dividend, and look for the stock to go up in value. Thank you for watching the video. Do me a big favor and like the video and subscribe to the channel as well. Provide some comments. I'd love to hear your thoughts on Big Five, and good luck investing in 2023.